Hello friends, my name is Benaki and welcome to my channel Fintech Logics. Today we will talk about digital lending, specifically how location data is used for verification. So we have discussed in our multiple previous videos about digital lending, may be use of SMS or how application submission is done, all those things. Today we'll talk about specifically about verification and location data use. So the key takeaways from our video would be from which source location data is collected, what data elements are used in form of location data, some examples of the parameters that we construct from the location data, and finally we'll conclude with examples of the application where what kind of location data is used for what kind of loans. So let's begin. Now, just to give you a recap, we have talked about this simplified digital lending process, and the highlighted one is verification, and we have talked about so many data points of doing verification, and location is one of them. Now let's look at the source of our location data. So primarily, if you see, location data is collected from SIM, mobile phones SIM, Wi-Fi, the connection in which the phone or your web device or your laptop is connected to, smartphones. So this is specifically about the PIN information, the IMEI numbers, etc. And then there are address that we get from your credit bureau data, right? So that location is also used. So primarily all these are used as your location source. Now primarily what information we collect? Latitude and longitude. So this is about where the exact location is or geolocation is as per the customers who have given it or would have collected from device and all. PIN code, it is collected from your address. Date and time, what date and time versus what address we have. IP address based on your Wi-Fi connections and all, network connections, network provides this data. And various types of identifiers, like I was giving example of IMEI number, which is for device, and so on. Now once I collect this information, I use it for multiple purposes. So I calculate multiple parameters from this. So from call details, your geo variation, that okay, for last at the time of application submission, what is the customer's location versus what customer's location is in the address that he has given versus what customer's address is in the official location. So that, and even spend analysis if we do, then the location of different kinds of spend that the customer is making, right? So that is used as a parameter. Now call details, to check the mobility details, geographic variation of the transaction, where all the customer would have done transaction in last 30, 60, 90 days. If there is any cross-border exposure, current address verification, that where the current address is, PIN code that customer has given versus where he is applying the loan from, IP address for any fraudulent history. Now random location checks, if the customer's pattern is there that cannot be described, he is there in some random locations, specifically for blacklist areas finding out. So for example, there is ABC area in a location where unsecured loans are not given because that is a blacklisted area and there are a lot of defaulters in that area, right? So if your normal customer's location application where he's applying from or the address might be showing something else, but your random location might be showing lot of relevance of customers to the address which is blacklisted, right? So from this random location also we can derive relations to blacklist locations, where all he has, if he has been applying from or has been to any location or even done transaction there. Now climatic info in case of any natural calamity. So this is specifically used for your collateral purpose, that okay, where all this is there. Population density of any location, just to find out that okay, what is the potential of a business in certain area. If a business is there in certain area, if the population density is good, and there are a lot of chances that the business will grow at a rapid rate. Competitors' business in that area from the location, and your geographic business compliance. So for any particular location, if customer has submitted all the compliance related artifacts and details or not, right? Now you would be surprised, okay, I get all these derived parameters, how do I use it, right? So in that case, let me give you few examples of this. So in case of farmers loans, right? So if a farmer is specifically exposed to lot of floods in that area, then there is a specific set of analysis which is done, which is called as spatial analysis. So this is basically we are finding out the location's history of climatic changes, if it is exposed to any natural calamities or not. So that comes handy in terms of deciding the farmer loans, your interest rate, if there is any additional risk to add any spread, etc. Spend analysis. So specifically for any kind of limit based loans or even credit cards. So the spend analysis, if you can get where all the customer spends, right? So if there is any local spends or even cross-border spends and all, so that helps in deciding about the customer's limit, looking at the exposure he has. Collateral valuation. So any kind of project funding that we do, it might be a commercial real estate loans, or it might be loans for specific business purposes. Collateral valuation is done. Now in collateral valuation, if we can attach an angle of location, that okay, if it is exposed to natural calamities, or if the collateral location is in a specific blacklisted location or any other reason, right? So it becomes much more easier to decide about the credit rating, right? So collateral valuation also, your location data helps. Now business potential. So specifically when we're talking about this population density competitors business, so from customers location we are deriving what is the population density of that area, if the business would grow at and what rate, right? So that helps in terms of identifying business potential, that is helpful for doing a business loans credit underwriting. And finally also doing a fraud analysis, so wherein I was talking about this variation of customers location or even random area visiting, or even what are the different areas that the customer would have applied from, right? So all those things become pretty easier if location data is used. Now based on different types of loans, there has been usage of this location data for right from your personal loan space to heavy equipment loans or even commercial real estate. The use has started both in India, US and other regions as well. This is growing at a very rapid rate. But one thing to be given as a caution here is that we depend on the location data either from device or even IP address, very few cases from your normal address which is given by credit bureau. So definitely this is a aid in doing your credit underwriting, but still there has to be done lot of improvement in these areas to accurately understand the customer's behavior from location data. Work is going on as on when there would be additional advancement or even innovation in this area, I'll definitely create different videos to let you know all these details. Thanks a lot for watching my video, viewers.